All right. Good morning and good evening. Hello and welcome back to the live sessions. We are resuming after a break of about 1 week or so. Last week entire was involved into some engaged socially. Actually, my family was visiting, and that kept me engaged during these times. Uh, but let's get started off from where we left, and hopefully we should be able to continue from here on. I had sent a post on Monday last, or maybe Tuesday, requesting a profit booking for gold and Euro USD. Dow Jones remained the same, selling on rallies. So if you had seen that post, maybe gold print has printed another low, another high on Friday. So a slight adjustment on the potential counts that we were doing, and this is not required now. Okay, primarily what we are suggesting in gold, or what looks like that could happen in gold, is either the correction is completed for 4,000 levels, or it is going to go one more leg lower. But if if the five wave or the impulse rally is correctly done or labeled here, that means what we are now going to see is a potential corrective decline. I'm just removing these trades. We don't have any at this moment, but if this five wave movement is what we are going by right now, then rather than focusing on the resistance levels upside, we would now shift our focus to support levels on the lower side, where we would ideally be looking to go long in long positions actually. So if this is correctly done, the 38.2% is just below the previous wave 4, which is around the 45.90, and if it goes further lower, I mean potential remains for bears to drag lower towards the 4400 level. That would still be the 61.8% Fibonacci retracement of the entire rally from 4,000 levels to 40, almost 4,900 levels. All right. Now, for this to happen, 4,900 resistance must hold for, going forward. So at this point in time, we're not recommending, or it's really not recommended. As I said, these sessions are actually not recommendations to trade. It's basically or primarily what we think are the wave counts telling us a story. It might just help you to take an informed decision based on the counts that we are discussing here. Please do not take this as any form of encouragement or to trade or speculate into the markets. All right. Uh, okay, let's get back to the charts. Possibly what we are looking from here on is a corrective decline. I mean, if today's gap down open can be seen as the first wave, and you see there is a corrective three wave rally after that, reaching almost 4830 mark, and the next move could be one more leg lower towards the 4590 at least, and it's also 38.2% of the entire rally. So we would be looking for some sort of bottom forming around 45 90 or 4600 mark. Possibly we might also add up. So these two, the support range begins, that's what normally from the 46 handle, could go towards 44 handle as well. That is the region where we would be our bulls might be interested to come back uh, and take control. All right. Now, if this doesn't work out, I mean, if prices push above that 4900 mark, then we are probably looking uh, to further higher levels. Possibly the resistance, major resistance is not before the 53, 50 mark, 5400 mark, but immediate resistance would be 53.33. That is where bulls might be wanting to target near term if it breaks above 49. High probability is looking for a corrective decline at least towards the mentioned levels around 4600 and 4450. Sorry, 4400. Now, a consistent break below that mark, 4270, which is a 78% retracement of the above rally, that would indicate that bears are not yet done, and they might want to print one more low. In that case, we would shift our focus absolutely not on the selling side, but possible buying at lower levels below the 4000 handle as well. All right, so that is the story. No major. I mean, we are not going short. We don't uh, think it would be a good or safe idea to go short. It's quite aggressive. Uh, uh, Even if you're inclined to do that, it should be with a very tight stop loss above the 4900 mark. But you know what? Rather than going counter trend or remaining on the short side, it's better to sit on the sidelines, wait for prices to drop towards the 4600 handle. That is where we would enter partially and remaining around the 4400 handle. All right. So this could be potential planning for gold ahead. All right, let's flip the chart to the euro. Euro again, we did lock profits around a couple hundred pips around 1.1640. But a note, a post was sent, I think on Monday last or Tuesday last, to exit around the 1800, 1850 zone. So technically, we are out of euro longs at this point in time, and the reason why we did so was uh, it's not confirmed yet, but potential still remains for, because that was an ABC three waves. This is again an ABC. It could be an ABC, which is three waves. I'm not saying it will be. It could be. Uh, in that case, prices might drop or drift lower, print one more low below 1.14 or 1.14 handle to complete the entire structure. What we are looking for in the euro is uh, potential still remains for see that was wave 2 minor degree, and if it is correct, prices stay above that 1.14 handle, and if it goes to print minor wave 3 higher. Having said that, we still keep one option open, or the alternate count open, that an ABC corrective decline might not be complete, and maybe minor wave 2 could shift lower right now somewhere around these levels or the 61.8%. You never know, and that's the reason why we have asked to take profits once at least. All right, we would sit on the sidelines for now and wait for price action to unfold rather than going aggressively short right now, because the overall trend in euro remains bullish. The only thing is that we might see a corrective decline, uh, which could provide yet another opportunity to go long and build long positions. All right, so at this point in time, I'll remove this lot 200 points, and we have taken profits around, I would say 800, 1800 region. I mean, not always it's possible to pick up the tops and bottoms. But if it was 1800, it's good enough because we entered around 1440 or so almost in 350 pips. Now let's see if where could the next, I mean, even if it wants to rally, is it the 38.2% wave 4 if it wants to? This is where we would be now looking to see if there is support coming in or not. 1.1690 handle, or maybe the 61.8%. But if the first impulse, a corrective wave, and one more low is not out of question in Europe. So we would still wait on the sidelines for maybe a couple of days or so and see what the price action is confirming before we can commit on either side of the trade. US 30, that is Dow Jones. Okay, till the time it remains below the 51,000 handle, we are good to remain short on rallies. That's what is the broader picture in the Dow Jones. Uh, we still believe it's an impulse low. Maybe the SPX 500 is not behaving as expected, and Dow Jones might also go and print one more high. But if it does so, we would want to change the structure. But at this point in time, we are quite comfortable with this probability still open of a particular potential impulse being done, a corrective wave, which is one large degree wave 2 in probably in place around the 78% or just above that. And if it is correctly done, the first support which it should rather take out is 47,385. Now let's see and wait and watch how the price action is behaving. But selling on rallies, or broadly remaining short with a potential split stop loss above that 51,000 mark is the normal trading strategy for Dow Jones at this point in time. One interesting chart which I was looking, maybe we can have a quick look, is the VIX, volatility index for SPX. Now, despite the fact that SPX has been hitting all-time highs, one just done recently, you can see that the VIX is not printing low. I mean, these two are inversely, uh, they are correlated inversely. All right, so this one looks like a corrective decline. if I give you the date from 6th of March, I think that's when the stock markets or the SPX 500 dropped on the news of war, and VIX had spiked higher. But after that, it's been a corrective decline. It looks like a corrective decline. Maybe if we take the fibonacci of the recent boundary, just around the 78%. And you know what? If this low, which was printed around the last week of December 25, 13 handle holds. Remember, Dow made a high in January 2026, SPX as well. SPX a recent high right now. But despite those facts, the VIX has held high above its last week December 2025 lows, which indicates the volatility might be just preparing to return back, and the next target could be 50 on the VIX and 71 as well. Now, if this comes true, then I mean, it's not a rocket science to come out with a notion or a fact that the stock markets are headed for some churning on the south side. I think it could be a big one as well. All right. So be watchful, be a bit cautious in committing long positions in the stock markets at this point in time. All right. So let's take a break. Let's take a pause here. We'll be back again tomorrow with quick potential wave counts and trade updates for gold, euro, Dow Jones, possibly dollar index and VIX as well. All right. Once again, thank you for your time, for tuning in. If you're liking this, what you're seeing, you might want to be subscribed and also help us spread the word. Until tomorrow, as always, good luck to your trades and take care and God bless. Goodbye.